the management function. So, most of the countries promote tourism to earn foreign exchange, encourage developmental activities, improve local economic and generate employment. So for that, it requires human resource management in tourism. They will have to employ many persons, many staff, many personnel. Therefore, when we talk of human resource management, we have in our mind a variety of things. These include training, skill development, and upgradation of knowledge and skills of the employees, motivating the employees, effective utilization of the employees' skills and capabilities. And further, also in this chapter, we'll discuss about the attracting the personnel and how we will retain them in service. We have to retain the star category of employees to make our tourism to function in a better way. Wages, salaries, and rewards, monitoring and controlling the employees' performance. These are all included in the human resource management. These are aspects of human resource management and development are essentially for every sector, but in the case of tourism, they have a special significance. This is because tourism is a service industry, and here the customer is not only buying a service or a product, but he is also experiencing and consuming the quality of service which is reflected in the performance of the persons involved in the production and delivery of the service. Since what is marketed, the person involved, since what is marketed, here is a relationship between the customer and the producer of services. The importance of human services become vital for the success of the business. Generally, in such service in tourism, all the smiles are communicated because everybody should be received with a smile. Without smile, the tourism will not thrive. However, with the changing nature of tourism and growing specializations, only smiles, communication skills, and courtesy will not serve in purpose. For example, a guide may be a very good in communication. He may be a very good communicator, but unless he or she is equipped with knowledge and information related to the monument or the city or the tourist center, he or she will not be able to perform quality service. Similarly, a driver may be a very good at driving, but unless he knows the roads and maps and addresses of the city, only his driving capabilities will be of no help in providing quality service. And we must remember here that tourists, whether foreign or domestic, are increasingly becoming more demanding as regards quality of service. So day by day, they are demanding for better service. Generally, human resource management planning and development in tourism has to be taken at both macro as well as micro levels. At the macro level, one takes into account the educated and training infrastructure available in a country and the efforts initiated by the government or the national tourism organizations in this regard. This also includes the efforts initiated by the private sector. At the micro level, we have discussed about the macro level. We have discussed about the, yes, at the macro level. Now we are discussing about the micro level. One takes into account how best individual organizations plan and manage their human resources. For example, we'll take one example, Mr. V.S. Mahesh, formerly Vice President, Human Resources with the Taj Group of Hotels, is of the opinion that two central features common to all sectors of the tourism industry must be considered in this regard. The first one, the concept of moments of truth. The first one. The second one, emotive's relationship to the attainment of service excellence in an organization. In this regard, we will discuss about the empowerment. Discuss about the empowerment in different sectors. MOT, that is Minister of Tourism, also uh, gives different trainings to different jobs, but to make human beings capable of doing their jobs correctly, willingly, and with a smile, when they know that their management is most unlikely to be able to see or hear them, let alone hear of their failure to do so. In this regard, according to Gail Cook Johnson, the principle of empowerment of all employees is manifested in the ways that companies, number one, are highly focused and consistent in everything they do and say in relations to employees. Have managers who communicate with employees. The third one is to facilitate rather than regulate their employees' response to customers. Then fourth one, solicit employee feedback to get the employee feedback about how they can do things better. Stress the importance of teamwork at each level of the organization because teamwork is very helpful for the human resource development. Plan carefully the organization's recruitment and training needs. So these are the very much requirements in the human resources management. Then we'll go to, in fact, human resource management of customers care, expectations management are interrelated in the area of tourism. Now we'll discuss that customer care starts up at the top, meaning that commitment to the principle of customer care must emanate, must flow, that means must flow from senior management level within an organization. Successful management is not only about the right management style, about the right management style, but also an attitude, ethos, or culture of the organization. Then the second one, customer care involves everyone within the organization. Then third one, care for your staff and they will care for your customers. So this is something reciprocation with the management of the human resources that care for your staff and they will care for your customers. It is a continuous process. The fourth one, meaning that customer care is not a quick fix project, but a long-term plan. Now we'll discuss about the diversity in the industry. In the human resource management, also uh, we also glance at the view of diversity in industry. The tourism industry is a combination of different sectors, and each sector has its own specialized requirements in tourism of human resources. In fact, each, even within one sector, there are specializations and sub-specializations. For example, in a hotel, different jobs need different types of trained manpower. For example, in the hotels, there are four divisions. One is food production and food and beverage service, accommodation operation, and front office. So all the management functions are different. Front office is different than food and beverage service. Food production is different than food and beverage service. So every department has its own function. In a hotel industry, the diversity functions we can find because the human resources in the front office will not do the activities of food production, which is part of a hotel, which is the job of the hotel. So we will see the diversity in industry, in tourism. And the next one is in the human resource management, we will see human resource planning. What is human resource planning? In this section, we'll deal with certain aspects which are relevant for managers or entrepreneurs at an organization's level in the area of human resource planning. So human resource planning involves analysis of existing manpower resources. Then next one, planning for future needs, taking into account how many people with what skills and what levels the organizations will need. And the third one is planning for development of employees by adopting in-house training and continuing education methods to upgrade the knowledge and skills of the employees. This is known as capacity building. The in-house training, that means who are available in the hotel, the uh, the attendants in the hotel, this will be upgraded. Their skills should be upgraded. The bellboys, the waiters, their skills should be upgraded. So, uh, in this way, their training, their capacity building will be developed. Then we'll see about human resource management process. Number one is human resource planning, then recruitment, selection, socialization and induction training, training and development, performance appraisal, promotions, transfers and demotions. What is demotion? There is promotion And in the opposite, we will have to demote also. Those who will not work properly, the management has the capability to demote them. Recruitment and selection. Let us see the process of recruitment and selection. How shall we recruit? How shall we select the different types of individuals for different posts, for different jobs? Advertisements can be put in newspapers and professional journals. For example, for the post of bellboys, for the post of assistant manager in the front office, you can advertise in the local newspapers, in the electronic media, in the print media, and the hotel journals like that. The next one, employment agencies can be approached. There are various service providers, employment agencies, they can be approached. Educational training institutes can be contacted. For example, the hotel management colleges, institutes can be contacted to provide better students for training and upgradation in the job in the hotel. Specialists in the area can be approached by word of mouth or through correspondences for recommending suitable candidates. The next one is induction and training. Once we select the persons, we can allow them to join in the organization. Induction is the first exposure. He or she should be properly welcomed in the organization, introduced to colleagues, given details about the organization, made to know his or her position vis-a-vis others, acquainted with the company's rules, regulations, and working conditions. The employee is also is also to be trained in relation in the job requirements as the procedure and environment vary from organization to organizations. For example, a highly trained person in accounts will still require induction training when he or she joins in a new organization. Then information and upgradation of knowledge is the key to success in tourism sector, and all employees must have upgraded knowledge. For example, a ticketing person must know the recent operating routes of airlines and the fare structures, etc. Then we'll go for motivation. How the employees or human resources will be motivated. The quality of service in tourism depends on the job satisfaction of the employees. We have discussed earlier the characteristics of those organizations which are termed as service leaders. Hence, it is the manager's responsibility to motivate the employees. Besides rewards and incentives, this is also related to positive strokes. For example, it is very easy to tell an employee you have done this work badly, or you can give thanks for a good job. Then in the process, we must follow the appraisal system. Appraisal system, that means performance appraisal. Performance appraisal is an important but difficult task of the manager. This can be carried out in two ways. Informal performance appraisal, informal performance appraisal, and formal performance appraisal. Informal performance appraisal means a continuous process of giving feedback to subordinates about their performance in organizations. In this process, a manager spontaneously tells the employees how or she has performed in relation to a particular work. The formal performance appraisal is something different than this. In this system, many organizations adopt formal appraisal methods on a monthly, quarterly, or an yearly basis. This is done through a pro forma, which has certain set questions regarding the job requirements. In certain cases, the, the superior officers are asked to authenticate and grade the performance of their subordinate. So, this is known as formal appraisal. Then we'll go for the other, how this can be some set lines, how the appraisal can be collected. What are the parameters? Let us see the parameters. What are the parameters? We must see the parameters. Correct plan for the requisite number of people required at each level of each category of skill, providing for expansion and internal development needs. Then we'll go for set up appropriate cost-effective recruitment systems, set up effective induction and training system to cater the every source of recruitment. This is how the human resource development can be improved. That we are discussing. Identify and make available the requisite number of trainers to operate these systems. If the trainers will not be adequate, if the trainers will not be adequate, then how you can give training to so much of employees? If there will be one trainer having some monotonous view, it is not possible to give training to other people of the department, and we have already discussed that you have diversity in the industry. Suppose in the hotel, a food production trainer cannot give training for accommodation operation employees. So in this way, there should be sufficient trainers. Install an effective personnel administrative system to take care of the persons who are recruited. Set up a discipline management system whereby all employees are prepared to accept basic norms of discipline at work. Create a collaborative climate for industrial peace so that customers are not in the least aware of unavoidable tensions that are likely to occur in any management-employee relationships. The next management system is financial management. This is the most powerful management of a tourism industry. That is the financial management or the fiscal management. In this chapter, we'll able to understand the meaning of fiscal management or financial management, the various aspects of financial management, different terms used in the financial management, Raising funds, how to raise funds and fund allocation through budgeting. Now, let us come to financial management. When we attempt to analyze, when we attempt to analyze the financial functions of an organization, we find that funds or the capital have to be procured. Capital have to be procured. It should be allocated for various activities, and what has been allocated should be effectively used, and the fiscal management should be strictly monitored. Further, the results of this have to be recorded also. All this brings to fore a three-dimensional financial process. One is financial management, management accounting, and financial accounting. So now, financial accounting deals with the measurements and reports of the financial position of the organization and provides this to external users such as shareholders, creditors, government agencies, etc. Managerial accounting deals with procuring data for the organization's management, that is, to serve the internal users with necessary accounting information to carry out the management tasks of planning, organizing, actualizing, and controlling. Management accounting is the presentation of accounting information in such a way as to assist management in the creation of policy and in the day-to-day operations of an undertaking. And the next one, the financial management deals with the process adopted by an organization for taking financial decision through analyzing and interpretation of financial data for meeting the organization's objectives. Hence, the task involves analyzing financial needs, forecasting financial needs, managing working capital, planning capital structures. Good afternoon, Jamjamni. The next one is organizing financial operations. Thank you very much for joining, Jamjami. Okay, Jamjami Abdullah. Thank you very much. Then monitoring and controlling finances, etc. Then we'll discuss about financial planning. What do we mean by financial planning? Financial planning, that we should plan for the capital requirements, capital structure, credit policy, and other financial contingencies. So, for financial planning, we must take into mind that, okay, Abdul Mumin, welcome Abdul Mumin. Thank you. Raising funds. How shall we raise the funds for the financial planning? It is it is very difficult thing to know. Uh, Hello. Own capital borrowing deposits from friends, relations, and others, spontaneous capital through credit facilities from vendors, negotiated credit, that is short-term loans on negotiated basis from commercial banks and finance agencies, etc., to be paid back in a specified time. Okay, thank you. Now, a, what does a good manager does for raising the funds, and what aspect you will have to think for? You will have to think for what are the interest rates and borrowings, what is the repayment capacity of the organization, how soon is the organization likely to make profits, is the return from the investment made by borrowed funds going to be higher than the interest to be paid on borrowings, etc. Then how to manage the working capital? Financial, what is, first of all, we should name what is the working capital. Financial management also involves proper management of the investment of capital in business, that is, managing working capital. It is of two types: investments for permanent or long-term purposes, and the second one is funds needed for current operation, that is known as working capital. Then how to manage the cash? The manage it is difficult to manage the cash because the demand for cash generally because of three behavioral motives. One is transaction motives, then precautionary motive, then speculative motive. Transaction motive, holding cash for day-to-day business activities. Precautionary motive, cash needed to deal with unanticipated delays or other uncertainties. Speculative motive, cash needs cash needed to take advantage of bargain purchases or availing opportunities out of unexpected developments. Then there are the different aspects for the management of cash. The number one is that determining the appropriate cash balance, managing of the storage, collection and disbursement of cash balances, and investment of temporarily idle cash in interest earning assets. Then we'll switch over to the subject managing costs in financial management. How to manage the costs? Let us discuss about the cost. How many types of costs? First of all, direct costs. These are readily identifiable with the produced products and services. Products and services. And the next one is indirect costs. These are not only readily identifiable but are required in running the business. Then we'll think for the what is fixed costs. The costs which do not change with the sales of production volume are treated as fixed costs. Costs, for example, if a tour operator's sales of tour packages does not increase, remains static, or goes down, the cost which he is incurring in paying office rent or salaries cannot be avoided. That is fixed cost. Then variable cost, for example, if the occupancy rate in a hotel goes down during this season, then there will be the expenditure cost will be less. So that is variable cost. Because if in the off season, for example, the management can cut down on the number of room service personnel, or if the occupancy rate goes up, more personnel can be hired for room services. That is known as variable cost. Then we'll go for budgeting. What is a budget? Let us define a budget. We must know what is a budget. A budget is a systematic plan for the utilization of manpower and material resources. It represents an estimate of future costs and revenues and is quantified in financial terms. In simple words, budgets are written plans of business activity reduced to rupees or any other monetary term. The main features of a budget are it is prepared in advance and it is derived from the long-term strategy of the organization. Because the budget is prepared from the financial experiences of the organization. It is related to future plans also, for which objectives have already been laid down, and it is related to a specified period or a time. There are terms like weekly budget, monthly budget, yearly budget, or annual budget, like this. Now we'll discuss about establishing financial objectives. Generally, the major financial objectives for any organization is long-term profit maximization. This is true of tourism industry, where profits start coming from second or third year only. At the same time, in hospitality and tourism enterprise, certain other objectives are also included with determining the financial objectives of the organization, which include providing high quality services, to be the lead organization in the area of business, to be recognized as having the best reputation, or to the fastest growing organization. Then budget should also show the forecasting revenue. For forecasting revenues in the tourism sector enterprises, one should have information regarding the economic environment like economic trends in the tourist generating markets, expected inflation for the budget year, expected variations in the cost of the specific purchases, nature of competitive conditions, and travel trends, etc. Estimating estimating expenses. How to estimate the expenses and how to show it in the budget. The expenses to be incurred for the budget period must be eliminated, and for this managers must obtain information regarding expected cost increases for supplies and labor costs in order to forecast their variable expenses. Determining net income. Generally, revenues minus expenses are equal to net income. Then the fifth one is reviewing and approval. Once the budget is made, it should be reviewed and approved by the competent authority in the organization, say the board of directors or the budget committee or the owner himself or the owner manager or the authorized person. Then types of the budget. We'll see the type of the budget. Every organization has a master budget. The total comprehensive budget of that organization, that is known as the master budget. Then there are different budgets like production budget, purchasing budget, administrative budget relating to administrative expenses. Revenues are allocated to meet the estimated expenses of different departments. So budgets can be classified on the basis of time, function, and flexibility. And flexibility. Then what is a time budget? In term of time, a budget can be a long term or a short term, a current or a rolling budget. In the term of functions, the budget can be classified into sales, production, purchase, research, etc. For example, a sales budget will take into account the projected sales of a definite period. In the terms of flexibility, we have two types of budgets, that is fixed budget and flexible budget. A fixed budget is designed to remain unchanged irrespective of the level of activity and is prepared on the basis of a standard of fixed level of activity. A flexible budget is designed to change in accordance with the level of activity and attained. In case of tourism organization, the nature of business and sales are largely unpredictable. It is difficult to foresee the demand in case of new ventures. The business is subject to nature variations. For example, a cool summer will affect the travel to hill stations because in the summer season, the tourists travel to hill stations and the In a summer, if the hill stations are full, no visitor will go to the hill station, or very few visitors will visit. Now we'll go to the budgetary control. In the budgetary control, we'll see the activity ratio, capacity ratio, efficiency ratio. What is capacity ratio? It means a measure of the level of activity achieved over a period of time. Then capacity ratio indicates whether and to what extent budgeted hours of the activity are actually utilized. Efficiency ratio indicates the degree of efficiency attained in the production. Now we'll switch over to the next subject after financial management, that is operations management. In this subject, we'll discuss about knowing the operation management or the definition, understanding the importance of operation management, and designing the operation management system and quality control. These four things we'll know in the operations management. Now we'll go for the definitions, or we must know what is operations management. As the name says, operations are purposeful activities of an organization. Each operation adds value to some entity through a variety of means. This may include a change, either a physical or sensual, either a physical or a sensual, in the form of or state of inputs or value addition through location or inspection. A taxi available in the exit of an airport adds value to the service in comparison to a person walking a distance to the taxi stand. This is the difference of value addition. All production or operation functions are a part of the conversion process which transforms entities into goods or services through value additions. The quality of service and the effective and efficiency of an organization, for example, the tourism organization takes shape through operations. Now, operations management refers to the complex set of management activities involved in planning, organizing, directing, and controlling an organization's operations. The persons are and the person and activities are involved in this, like human beings and physical situation, financial situation, technological situation, that is resources, then external environment, transformation process, operation and value addition, outputs, outputs that is resources, service and goods. These are the operations management. How to design the operation management system? How to design or designing operations system? We must see that what products or services will be produced. What would be the quality of the produced products or services? How will they be produced? Who will produce them? And where they will be produced? These what, how, who, where, these are the question marks. Then what are the steps for planning designs? What are the steps of planning designs we must know in the designing operation system? The first one is generating ideas. That is the first step of planning design. That is generating ideas. The second one is selecting those ideas were technologically feasible, marketable, and are in tune with the organization's objectives and overall strategies. The third one is making the final design of the product or services. Then we must know what is capital planning. Another decision in designing the operation system, how many products or how much service will be produced. In other words, operations decision concerned with the quantity of goods or services to be produced in terms as capacity planning. And this capacity planning includes translating forecasts into physical capacity requirements, measuring the existing capacity with the demand, and deciding the resources needed to meet the demand and if needed to work or suitable alternatives. Then capacity planning includes and it is related to scheduling, capacity utilization, and psychology of waiting. The following are the examples are related to tourism operations in this regard. For example, Indira Gandhi Airport, New Delhi gets maximum international flights between 11 p.m. to 5 a.m. A good operations manager must ensure landing and runway slots, aircraft parking, and quick turnaround, and takeoffs after routine maintenance. Baggage reclaim facilities, security, customs, immigration checks, check-in by airlines, etc. The system must not collapse under this pressure of passenger facilitation and security requirements. So this is the system of capacity planning. So everything must be planned what to do and what not to do. What is to do after what thing. Then we'll think for the process selection and planning. Process selection determines how a service or a product will be produced. That is known as process selection and planning. The next one is facility location planning. One of the most important operation system design decision in tourism is to plan the locations of the production or service facility. For example, in the hotel chains, locations, locations, we have to plan the locations accordingly. Layout planning. Layout planning, it includes considerations like facilitating material flow from one departure to another one department to another, reduction in handling costs, avoiding delayed and congestions, etc. That is layout planning. Then purchasing. Purchasing designs have also been included in operations management. Most of the organizations install a purchasing system which decide on specification, supplier identification, placing purchase orders, checking the quality of purchases made, etc. So after that, in operations management, we'll discuss about operation planning and control decisions. How to plan the operation planning and control decisions. Maximizing customer service, minimizing inventory management, and maximizing system operating efficiency. Operations planning system in which end products are analyzed to determine the materials needed to produce them in terms as materials requirement planning. Materials resource planning compares the needs of materials requirement planning with known resource and calculates unit costs. Now we can give a travel agency example. Let us take for example the day-to-day management in a travel agency. A travel agency operation must be planned and in detail. It should be planned in detail. Once this exercise is over, each department should be given their area of operation with some overlapping in order to provide a fail-safe system so that it can work correctly. For example, if there is a pressure on domestic ticketing, international ticketing department should assist and vice versa. Excuse me. Then tour department. Here the task needs to be broken down still further into accepting bookings, itinerary planning, tour costing, hotel bookings, issuance of vouchers, etc. Facilitations. Visas are essential for travel to foreign countries. Frequently, it is observed that time taken by embassies is longer than time at the disposal of the travel agent or customer. So, an optimum flow must be worked out. Enough field staff must be deployed and their activities coordinated in such a way that no sooner is one visa received than another one is filed. This will ensure greater customer satisfaction, particularly from corporate houses. Then billing. Billing should be made in time. Billing should be made in time. No enterprise can succeed if its money management is, is ignored. In a travel agency, the vendors who are the vendors, airlines, hotels, car rentals, companies, guides, etc., must be paid within a certain time frame, varying from a fortnight to a month. It is important that bills are raised on time to ensure payments. Then control. Effective control is necessary. Controls are essential tools for operation management. They must suit the system. We give you example of a travel agency in this regard. In travel agency, there should be fully control over the staff. So all the in charges, for example, billing in charge, for example, the visa in charge should do their work accordingly. Control on ticket stocks. The stock should be the stock inventory should be verified time and again. Control on quality service. Quality service, or which we tell TQM, total quality management, must be thoroughly pursued, thoroughly followed. Without quality management, the tourism organization will not grow. The next one in the management operations is marketing management. What do we mean by marketing management? We must know what is marketing management, the concept of market segments, marketing mix, and marketing research. These are the different things we must see in the marketing management. What to know about marketing management? A travel agency or a hotel offers a product or service concept to the potential customer who has a need for it. Marketing management teaches us how to match the organization's offer and the customer's need so that both can achieve their desired objectives. Then the most difficult and important thing is identifying the markets. How to identify the markets? Identifies the needs and interests of the customers, helps in designing and product or service that matches the customer needs, promotes sales, delivers that products or service. However, we must know how to identify the markets. In this system, we'll know the customer needs, the process through which we distinguish our prospective clientele into homogeneous and distinctive groups is called market segmentation. After that, we'll see the marketing mix and strategy. When you have to offer a product or service for the sale, you have to take care of certain factors like specialty of your product, expected price involved, mode of promoting your product, channels of distribution, etc. The four P's. We must emphasize on four P's for the market mix and strategy. Four P's, that is product, price, promotions, place, that means distribution, place of distribution. For example, any activity related to product or service includes quality and features, brand name, packaging, services, etc. Similarly, promotion includes advertising, sales promotion, brochure preparation, public relations activity, etc. Planning is most important to develop appropriate marketing mix. In planning of the market, you have to take care of the following facts. Analyze of the existing market situation, identification of problems and opportunities in the situation, defining the objectives, defining the objectives, designing the marketing strategy, developing the marketing programs, etc. Budgeting, forecasting sales and existing cost and profit contributions. These are known as marketing mix and strategy. The forward step, what we will go in this marketing management, that is marketing organization. In this section, we will introduce you to the various ways in which the marketing functions can be organized. Organization refers to a system or framework in which various activities are performed. Marketing involves division of tasks and effective coordination with others. Thus, to be successful in marketing, the marketing functions need to be organized. This involves three main tasks: planning and control, executive, and coordination. Grouping the function of the organization into departments or divisions based on the nature of jobs or tasks to be done, and then proper coordination and control of the departments are the essential function of an organization. We must There are, however, two main ways in which functions or tasks can be divided: geographically or by specialization. For example, suppose the company in which you are working has expanded its business to different regions. In this situation, in place of one person looking after all regions, if you appoint one more person in charge of each region, then definitely the market would be better controlled. This is called geographical decision, geographical division. Then we'll see the specialization. For example, suppose the company in which you are working has expanded its business to different regions. This is going to a geographical decision. But when the job responsibilities require some specialization, it is by specialization. The further thing we should think in the marketing management about marketing research. You may have already understood that the effective Marketing, it is a most important to have proper feedback about the market. Proper feedback will only be available through market research. Otherwise, it is not possible for market research. Then what are the areas we should look for? That is market assessment, product evaluation, how many customers, where are they located, what is their age and sex and salary, how to reach them, trends and changes in the above information. Then we'll see the product evaluation, that is trends in sales and market share, competitive products and shares, prices and price structures, features and specialty of the products. The next question is how to get information actually, because without information, market research is not at all possible. It involves five broad stages: defining the problem and deciding the objective, planning of research, field work, analysis of data, submission and evaluation of report. This is known as marketing research. The last one in operations management is information technology and management. Information technology and management. This is the aspect the IT sector is involved. What is the objective? First of all, we must know the objective of information technology and management. The objective is that we must aware the organization of information technology for collections and generation of specific information. Learn about the application of information and technology in the area of tourism. We must have an idea of information handling related to particular tour using computer. We also have an understanding of information networks in the planning and executions. And the next one, we must know the managerial tasks related to the role of information and technology in tourism. First of all, we must know the managerial roles. What are the managerial roles in information technology and management? Generally, when one deals with management, the emphasis is on human resource development, finance, or marketing that we have already discussed. However, with the technological revolution and advancement, the direct bearing on the success of any enterprise, for example, in case of holding conventions, fax, computers, Xerox machines, emails, etc., are inbuilt in the product. Hence, it is essential for both managers as well as entrepreneurs in tourism to take note of what is termed as management of technology. Certain steps can be taken in this regard. Some steps what will take for upgradation of management technology or upgradation of information technology and management we'll discuss one by one. Upgrade our knowledge, we must upgrade our knowledge in relation to information system and new technology. analyze their merits and demerits in relation to our own enterprise. Then it is after this assessment, you should go for adapting your organization's policies in relation to such information and technology. You must have trained and qualified staff for the technology, and the system is utilized in a productive way. Ensure proper maintenance contracts for technology you are using. It must work. And the utmost important thing is that you must create an environment which is technology friendly. Now we will discuss what is the role of information in tourism. Information is a vital element of any system or industry to exist and prosper. Tourism industry, as a matter of fact, require large amount of information on various arenas. The rate of the role of information in tourism is vital for everyone. For example, a tourist guide requires historical and cultural information of the place. A guide must be very aware to which he is escorting the visitors, and the manager of the travel agency must be very updated in the development of the tourism infrastructure of the tourist center. Then how to manage the information system, that is information management. The areas are like one has to study how to collect information from various sources such as printed media and electronics media. It may be non-printed also. The collected information is to be systematically processed, keeping in view the user's requirements. The last one is the processed information can be printed as information product and be saved in the computer as well. Now we can see about information or data collection. A manager must know a manager must know the difference between the data and information. What is the difference between a data and information? Outwardly, both the concepts are same, but there are a lot of differences. Data is raw and unanalyzed numbers and facts. Information is that data which has been organized and analyzed in a meaningful way. That is the difference between data and information. In tourism, when you are getting a lot of information from various sources and also collect a lot of information locally, the information base can be used to generate or produce literature specific to the needs of the organizations. For example, you can produce a brochure of information. You can produce the CD-ROMs. CD-ROMs prepared by the Government of India Tourism and the Rajasthan Tourism Corporation are very well organized. In many of the government organizations have opened their websites inserting the data of information. Then how to handle the information. Once the data is collected on the sheets and as a printed leaflet, it has to be organized and analyzed properly so to get any piece of information easily. For example, one likes to go to visit Taj Mahal of India. He can get a leaflet from Government of India and plan accordingly. Now we'll see about the information technology. Information technology which helps the information handling, information generation, communication of information, and information viewing is known as information technology. The simple automation of information using computer is a preliminary area of information technology. Once the information or data is in the computer, it may be transmitted using networking system. Information communication involves use of technologies like email, telephone, fax, paging, teletext, and teleconferencing, etc. Besides computer and communication technology, a tourism personnel should also have knowledge of multimedia handling and audio and video interactions, etc. The technology like fax, telephone, email, computers, video, audio, satellite should be conversant with him. Computer application in tourism. In tourism, we can make one database, destination base by using technology, market research, product design, promotion, reservations, linkages and networking we can do. Now we'll see what is CD database. CD-ROM, that is compact disk read only memory, that is CD-ROM, has similar functions as a normal music CD except that it also contains text, pictures and graphics, etc. So all kinds of information can be computed in it. For example, one CD-ROM has been prepared by Intac regarding human tomb, regarding Humayun tomb in Delhi. And also there are different databases are available regarding Asoka Hotel, Taj Hotel, etc. in the hotel sectors. Then online traveling. This is the final frontier of information technology, the online traveling using the concept of virtual reality. It can be possible through computer. Information network. Data or information networks involves the connectivity of computer to each other for accessing or exchange of information. something like local area networks, LAN, metropolitan area networks, and wide area networks, that is one, like this. So, information networks play an important role in tourism promotions and tourism functions. Let us discuss about communication in tourism. Communication technologies in tourism industry provided opportunities for business expansion in the geographical marketing and operational sense. India being a tourism destination, it becomes more important that tour operators and individuals interacting with tourists should have the basic knowledge regarding email, electronic email, telex, phonogram, paging, teleconferencing, smartphones, etc. Then audio and video also has important role in tourism communications setup. So this is regarding the information technology and management. The next block, what we'll read about managing financial operations. Managing financial operations. In this chapter, we'll discuss understanding profit and loss statement, understanding balance sheet, profitability analysis, project formulation and appraisal. So all these four subjects will deal in managing financial operations. First of all, we should understand the profit and loss statement. The profit and loss statement or the income expenditure statement is prepared to ascertain overall result of the business activities for an accounting year. For example, in the hotel industry, the profit and loss statement is always prepared. In the travel agency also, profit and loss statement is prepared. What is the meaning? First of all, see what is the meaning of the profit and loss statement. The profit and loss account is one of the important financial statements. It shows the net results of the business operating during an accounting period. It summarizes all the revenues or incomes and all the expenditures for, for earning that revenue. Why profit loss account? Why it is needed? The first reason is that knowledge of net profit or net loss. To know the net profit or the net loss, it is prepared. Comparison with previous year's profit. It is a it is prepared because for the comparison, what much we have earned last year and what much we have earned this year. Then control over expenses. The most important aspect of preparing profit and loss statement is to have control over expenses. Then we'll discuss the measurement of income. Profit and loss account measures the income generated by the entity, by the organization. You must be knowing that income is generated from or with the use of assets. For example, in a hotel, the profit is coming either from front office or the food and beverage system or the food production. So it is the various ways how the income is generated. Now we'll see the realization concept. The concept deals with the determination of the point of time of recognizing the revenue. Revenue is considered to be earned when goods are delivered or services are rendered to customer. In hotels, the services and food are delivered to the customer and revenue is generated. And accrual concept. Accrual concept evaluates every transaction in terms of its impact on the owner's equity. Owner's equity. Then matching concepts. This is an important concept in preparing the profit and loss account of a firm. The matching concept requires that expenses for an accounting period should be matched against related revenue of appropriate accounting period. Then what is accounting period? For fixed, for a fixed year, per se for a year, income statement or profit and loss account a is a flow report. Hence, in order to know the result of business operations and financial position of the firm periodically, it is divided into segments. It may be yearly, quarterly, monthly, or half yearly, as the management feels. Now we'll discuss about the relationship between profit and loss account and balance sheet. In profit and loss account are important financial statements of the business entity. They reflect the financial health of the firm. Then is balance sheet is the financial status of an enterprise at a particular point of time. So that is profit and loss statement. That is the difference between profit and loss statement and balance sheet. In accounting system, we must learn some important terms. Gross sale. This refers to the total selling price of all merchandise and services sold during an accounting period. However, the cash sale and credit sale are separated. Returns and allowances. Sometimes it happens that the merchandise sold are returned back to the farm due to various reasons. The return of merchandise sold represents the amount of reduced gross sale. The farm should ensure that return of goods sold should be minimum. Then we'll see what is a net sale. A net sale is the deduction of return and allowances from gross sales gives the volume of net sales. Gross profit. The gross profit is obtained by deducting the cost of goods sold from the amount of net sales. Revenues. Many firms use this term synonymously with the sales. Amount of realized from the sale of goods and services. A farm, a tourism firm, or a hotel, for example, may earn revenues from the different sources like front office, food and beverage service, food production, etc. Expenses. The cost of the cost of earning revenue is called expenses. Expenses occur when the assets decreases or liabilities are increased in order to produce revenue. Cost is not synonymous with expenses. Cost is distinguished as expired cost and unexpired cost. As the principle of cause and effect, certain costs expire in an accounting period and can be directly associated with the specific revenue recognized during the period. For example, of such, as, of such costs are those related to producing goods that are sold. General and administrative expenses. It is like the expenditures incurred in salaries of staff personnel and miscellaneous expenses, marketing expenses, production activities, cost of goods sold. This represents cost of raw materials, labor overheads, and other expenses that can be matched against the goods sold by the firm. Interest. The fixed charges paid by the firm on the money borrowed are called interest. Then depreciation. Depreciation is the process of allocating cost to a tangible fixed asset over its life in a rational and systematic manner. Depreciation is always charged to fixed assets like plant and machinery, building, office furniture, equipments, etc. Selling and distribution expenses. These include salaries of those engaged in selling and distribution of goods, commissions for selling, advertising cost, and samples of packaging cost. Insurance. This includes premium paid against the fire or the type of risks involved in carrying out the business. Then preparation of profit and loss account. Profit and loss account is a summary of all accounts dealing with transactions relating to revenue and expenses. It is a statement of the profit earned or loss incurred during an accounting period. This statement is very useful to the end users because the analysis of this statement enables the evaluations of profitability of the business operations or the business organizations. For example, a hotel is a part of tourism organization, a tourism management, and the profit and loss shows How, in what aspect it is getting more and more profit, and which aspect it deals with the losses. Now it must be clear to you that profit and loss account is a summary of all accounts dealing with transactions relating to revenue and expenses. We have learned about profit and loss account. Now we'll understand what is a balance sheet. In unit 19, we are discussing about the balance sheet. A balance sheet we have already we have already learned that a business organization conveys financial information to the users through financial statements and reports. A financial statement is nothing but collection of data organized according to logical and consistent accounting procedure. According, Accordingly, it involves three phases. The recording of transactions is called the original entry book or journalizing the transactions, then classification of these transactions in ledger, different heads. Journalization is the basic entry and the ledger is the double entry. That is why the ledger is also known as double entry system. In the appropriate head, it is written. Then summarizations of the records. Balance sheet is a list or summary of the balances of various accounts after a formal closing of the books for a period. What is the basic concept of balance sheet? A balance sheet is a financial statement that shows the financial position of a firm as on a specific date, as on a specific date, usually on the close of the accounting period. In accounting language, it shows the assets, liabilities, and equity for the firm as on specific day. The Indian Companies Act 1956 requires that balance sheet should give a true and fair view of the state of affairs of the company. In addition to this, contents and presentations of periodic final accounts of business are governed by basic accounting concepts. In accounting language, it shows the assets, liabilities, and equities for the firm as on a specific day. The concepts which are central to the preparation of financial accounts and statements are going concern, entity concept, consistency, prudence, accruals, and dual aspect. Going concern concept assumes that the business entities shall continue to exist and operate unless there is an evidence to the contrary. Consistency consistency concept requires that the accounting treatment of items in different periods should be followed consistently. Prudence or conservatism is a basis of accounts preparations requires that profits will not be recognized until they are realized. Losses will be recognized as soon as they are apparent, even though they have not been realized. The rationale of this convention lies in considering the uncertainty events. Accruals or matching means that income and costs of earning that income should be identified, matched when calculating the income of a period. Costs and incomes are to be recognized as incurred or earned, not when money is paid or received. Entity concept in accounting, a business enterprise is considered to be a separate entity than the owners. The dual aspect concept assets equal liabilities. Assets indicate that business owns, which liability refers to what business owes. The term liabilities includes capital and other liabilities of the firm. Now we'll discuss about the structure of balance sheet. The structure of balance sheet in which will the various items of the balance sheet. Now we'll discuss what we'll insert in the balance sheets. That is assets. Assets represent resources which are of some value to the firm. They have been acquired as a specific monetary cost by the firm for the conduct of its operations. Assets may be classified as fixed assets, investments, current assets, and other assets. Fixed assets are all those assets which are held by the firm with the intention of using them more or less permanently for producing goods and services or for other regular use in business are called fixed assets. Fixed assets are tangible, relatively long-lived items concerned with the business. The benefit of fixed assets is that it is not purchased frequently. For example, land building, plant and machinery, motor vehicles, equipment, furniture are referred as the fixed assets. Then depreciation. Depreciation we have already discussed. Depreciation represents fall in the value of fixed asset as a result of its use. As a result of its use. Then the important methods which are used for this, how to calculate the method, how to calculate the balance sheet. That is straight line method and reducing balance method. Now we'll see what is the investments. Investment represents the amount invested by a firm in long-term securities like shares, debentures, and bonds of other firms or government bodies for profit or control. These investments are held for a period greater than one accounting period. The investments in the balance sheet are shown as actual cost or market value or the lesser of two depending upon the policy adopted. This is regarding investments. Now we'll be acquainted with the term current assets. What is a current asset? Current assets are the resources of a firm which are either held in the form of cash or expected to be converted into cash within the accounting period or the operating cycle of business. The accounting period is normally 1 year. The components of current assets include cash, marketable securities, loans, advances and prepayments, sundry debtors or accounts receivable, and inventory. So cash refers to currency. That means which is a legal tender, check, or any other document that circulates as cash. Marketable securities, these are investments made by a firm in share and debentures of corporations and other securities of relatively short period of time. These include securities like treasury bills, notes, certificates of deposit, and temporary investment of excess cash. These are valued at cost or current sale value, whichever is lower. These securities can be sold and bought on stock exchanges. Then notes receivable. They represent the promissory notes which a borrower or customer makes to pay specified amount on specific day. Then accounts receivable. Accounts receivable are amounts owed to the company by debtors. In balance sheet, you will also find the term sundry debtors, which denotes the amount owed to the firm. Inventory. Inventory consists of stock of raw materials, work in progress, finished goods, stores, and spares. Loans and advances. This shows the amount loaned to the employees. That means loan given to the employees. Advances given to suppliers and deposits made with the agencies. Prepaid items. Prepaid items, in many situations, some of the items of expenses are usually paid in advance, such as rent, taxes, subscriptions, and insurances. Deferred charges. This is a term which represents the prepayment stretching beyond 1 year and so not classified as prepaid items. That is why it is called deferred charges. Then intangible asset. Intangible assets are assets or things of value without physical dimensions. Other assets. Other assets are assets which cannot be included in any of the above categories are grouped as other assets. They represent usually deferred charges, prepayment for services or benefits for the period longer than the accounting period and referred to as deferred charges. Now we'll see about the liabilities. In liabilities, there are mostly two types of liabilities: current liability and long term liability. Current liabilities are debts of firms payable within an accounting period. Then long term liabilities, a major part of the funds required by a business is obtained in forms of long term loans. You should recall that long term liabilities are usually for more than 1 year. These liabilities may be secured or unsecured. Then long term secured loans cover mortgage and notes where a building or other assets are placed as specific collateral for debt. Long term unsecured loans include notes and bonds. Notes payable are promissory notes with maturities in excess of 1 year. When the note enters the final year, it is transferred it is transferred to current liability. Bonds are usually sold to public in debenture form. A debenture is a long-term obligation of firm to pay interest and return principal sum as per agreement. Debenture loan may be secured or unsecured. So tomorrow we will read about the equity in understanding balance sheet. What is equity? We will read tomorrow. Thank you very much. Good night.
Hello, sir. Hello. Hello.